Now that you guys know what a stock is and what moves the stock, let's go into taking a trade, how to enter into a trade and how to exit a trade, and the different order types that are used to do this with both stocks and options. So this is going to be extremely important so that you can get in a trade and that you can get out of a trade whenever you like it or you don't like it. So I will go into my chart here, and as you can see, this is SPY on a 1 day, 1 minute time frame. So you can see the time frame is 1 minute up here. Okay. And you can see that I have my active trader over here. So this is my active trader. So I can see where price is. And then I also have my level 2 down here. And this isn't super complicated. This is very easy, but I'll go over buying what a market order for a stock is at first. So to enter into a market order, you're going to come over here and it'll say buy market. So you'll enter the charts tab. You'll go over to your charts, your flexible grid, either one, doesn't matter. And I recommend that you guys do this with me, but you'll press buy market on a paper trading account, and all you're going to do is you're going to send it, and it fills you. This is a market order. A market order fills you at whatever the price is at that current moment. So let me do it again. If I want to buy at whatever price is right now, I press buy market order and I send it. And it fills me wherever the current price of the stock is at that moment. So you can see that I got filled at 6.70 and 67 cents. And if I continued to do this, I could do that. And wherever price is, it'll fill me there. So I got filled at 6.70 and 86 cents. And as you can see, price is just pushing up. But if I wanted to sell, I bought 3 shares. If I wanted to sell, say I wanted to sell all 3, I come over here to edit and I go -3 because I want to sell 3 shares. Over here, the order type will say market. I confirm and send, and I send it. And as you can tell, I sold it for $6.71 and 10 cents. So if I come over here, I can see that that's the profit that I made, was $1.79 just from that move. Okay. But all a market order is essentially, it's if you want to get into a stock, you get filled at wherever the price is at that current moment. The good thing about it is that you can get in and out of shares or in and out of a stock very quickly, but you do risk slippage and getting filled at a different price than you see. If a stock is moving extremely fast, maybe there's a lot of volume, there's a lot of people trading it, the price is just moving insane, you can get filled wherever. So I would recommend using a limit order, which we'll talk about next. But first, I want to show you guys what this looks like when you're trading options. So if you're trading options, you're going to come over here to trade. Okay. I still have SPY, but these are the different contracts. As you look at this will be less confusing. We'll start with 4. So this is just SPY. These are the different strike prices. I'll get into this later. But if I wanted to buy a market order, I press buy, change this from limit to market, confirm and send, and it filled me right there at $67 for that contract. So I bought one contract at $67. Okay. So now if I wanted to sell that one, I can come here, I can right click, create a closing order. So it'll take me back to where it was. So this one right here, you go to trade and you should see it. It'll say sell right here, 1 share or 1 contract. And right now it says limit, but if I wanted to sell it instantly, I press market, confirm and send, and I sent it. And it filled me exactly where the price was. So on that one, I lost $5 because I purchased it at $67 and I sold it for $62. You can kind of see how a market order works wherever if you press market order, it's going to fill you wherever price is at that moment, whether it's the share or you're buying a contract of an option. So it's very important that you be careful when using market order, because you can get slipped and maybe you won't get the best entry that you're looking for. I'll go into limit orders next, the one that I would recommend the most, because you can control exactly what price you're going to get filled at. So we'll go into that in the next video. Now that you guys know what a market order is, we're going to go into a limit order and what it is. So a limit order is just basically saying that, say the share price is at $100, but I don't want to buy it until it hits $98. So I want the price to come down so I can get a discount, so I can get 2% off. Say you want a 10% discount, I'd put it at $90. So all a limit order is it's saying that I don't want to purchase the stock until it hits a certain price. So I'll go ahead and show you what a limit order is in the chart. It's the same thing for options. There's no difference. It's just going to fill you at whatever price you say. This works with selling as well. So I'll go ahead and show you guys what it looks like on here. So I'll go to my chart, and right now price on SPY on the 1 minute, 1 day chart, this is the current price of SPY. The price is $671.30, okay? If I want to enter into a limit order, I'm going to come up to here, buy market. You can either press trade, you can press active trader, and it'll show up. But you'll come over here, you'll come down to this button where it says edit. You'll press edit, and it says buy 1 share, but you'll change this from market to limit, and it will only fill you when price hits this point. So say I move my limit down to 671. I only want it to fill me if price hits 671. I confirm it and I send it. The stock, I'll only get filled if the stock comes down to 671. So right now it's at 671.39, and I can move this wherever I want. I can bring it down here. I can move it up here, and I can change it to whatever I want, but it will not fill me. I will not get 1 share of the stock unless it hits my limit order. So I want it to hit my limit order. I'm going to come up here. I'm going to get close to price, and I'm going to send it. There we go. Price came back down. It filled me at 671.45, which is where I put my limit. And it will also do this if I sell. So sell market, I edit, I come over here and I put limit, okay? If I want to sell my shares now at 672 because I want to make a profit, I'll come over here, I'll put 672, okay? Confirm and send, and I'll send it. And it will not fill me until price hits 672. So let me get closer so that it actually does fill, but I want to show you what it looks like if I put my limit order there. So now it's only going to fill me, and you can actually see it right here on the active trader. If price goes from here all the way up to here, it will fill me. So I can also move it down here. So I moved it down to 660 or 671.65. All right, I'm just going to get as close as possible until it fills me. All right, so if it comes up, it's going to fill me. But essentially, this can just be used to take profit if you want to take profit at a certain price. All right, hopefully you can hit it here. Is it going to hit it? Is it going to hit it? Are we going to take profit? Because you can also see that the entry is, okay, there you go. Took profit. But you could see your entry, and then you can also see your limit. So you can do it right here too. So you can buy 1 limit. So it'll say limit over here. You can see it. Or you can sell 1 limit up here. So you can do it that way, or you can just edit it directly. Those are 2 different ways to do it. If you want to go ahead and do this with options, it's going to be very similar. So you're going to come over to the option chain where you go trade, all products, and you'll see this is the option chain for SPY. So say I wanted to buy a limit. I'll come down here and it auto sends to limit, but you can put market, you can put limit, and say I don't want it to fill at $85. I want it to fill at $80. I'll confirm it and I send it. And now the order is pending, and it will only fill. It'll only fill if price comes back down to here. It's the same thing as with shares. It's just with an option now. So it'll only fill if the price comes down to $80. This is a good way for me to show how to edit orders too. You can come here. You can right click on it. You can press cancel replace order. You'll just come down here and you'll replace it with whatever price you want. So I just changed it to 82 and it just decides to go up even more. So I'll do it again. I'll put it at say 89. It's at 90 right now. There we go. We got a fill. Okay. At $89. Now say I want, it'll show you your position right here. See? If I go over to monitor, it'll say I have one contract at $89, and it'll show you the mark at where it is right now. So it's at $88, $86. If I want to close it, create closing order, and it already has a limit order right here. So I'll set my limit to $85. If I want it to be higher, I want to make more money, I put it up higher. Or if I want to get filled, I put it lower. So I'll put it right here, confirm and send, and it instantly filled me at $81. So I took a loss of $13 on that. But you get the point of buying limit orders and selling limit orders on both stocks and options, and that's how you do it. That's how I would recommend doing it, so that you get the best price and then you get the best fill when you want to sell. But yeah, let's move into what a stop loss is, because a stop loss is going to be extremely important when you are trading, so that you can get out of a trade if it doesn't go your way. The stop loss is always important. You always want to have a stop loss so that you can manage your risk. But I will go over that in the next video. All right, now that we have market orders and limit orders, let's go into what a stop order is and a stop loss, so that you can mitigate risk and you guys can stop losing money. Let me pull up the chart real quick. I will first do it with stock. I'm still using SPY, but all we're gonna do here is say we have a share of SPY. So now I have one share of SPY. Okay, this is going to be used if you don't like a trade anymore. So you're going to come to sell market. You're going to go over here to edit. You're going to change this to stop. Okay, say I no longer want to be in the trade. I want to sell all of my position if the stock goes to 670. Okay, so I'm going to come over here. I'm going to type in 670. And I'm going to confirm and I'm going to send it. And the only time it's going to sell my position is if it comes down to 670. And this is to mitigate losses. Say you're not in front of your computer and you're out on vacation or you're doing whatever, and you don't want to look at the charts, you're not day trading, and you want to mitigate your loss. You can put a stop order, and if price goes below that stop, it instantly sells your position. And this is extremely good to give you, I guess, a way to track your trades and also determine what percentage you're losing. So I will I'll use my drawing tools and I'll do a trend line. So this right here is a negative 0.27 move. So very, very small, but that way you know how much you're risking to your reward. So say I want to make a double the risk to reward ratio. So I want to make 0.5%, right? Oops, 0.5%. Okay, that means up here, I'm going to want to put a limit order so that if price comes up here, I take my profit, but if price comes down here, it instantly sells my position. So to put a limit order up here, we already know how to do this. So you go here, you go edit, and you put limit, and then you type in the price. So the price would be $675.23. So $675.23. Okay, you confirm and send it, and then your limit order is right here, and you can change this, you can bring it down, and essentially, if price goes up here, it will sell your position for a profit. If price comes down here, it will mitigate your losses and it will sell at a loss. But it's very important because price could come down way further than you expect sometimes. So it's always good to have a stop loss just in case. If I were to move this below here, it would instantly sell my position. And if I wanted to get out of the stock, the stock instantly, I come up here, say I put it right here. Oops, I put it above it. But yeah, it instantly sold my stock. Okay. And that's extremely important because if you're in a trade that you no longer like I said, you can get out of it using a stop loss. And then I no longer need this order because I've already closed out of that trade. The same thing goes if you're trading an option. So if I come over here, I buy an option, okay? Now I have one contract at $75. So I will explain all of this stuff later. You can come back and understand it better. But this isn't 75 cents. This is actually $75. So you just move the decimal 2 over, and that represents $75. Just to confuse you guys even more. And this is $127, or this one's $205. You just move that decimal 2 over, and it shows you the actual price of the contract. So now I have this position right here. I have one contract at 672 strike price. It expires October 8th. Okay. 2025. We're past that. It's December. Anyways, if I wanted to close this position using a stop order, I can come down here and I can use stop. And if the price goes below, say, $70, okay, I want it to sell my position completely. What I'll do is I'll go ahead and send it, and it hasn't sold anything. The order is still there, okay? If I go on my charts, I can see where it is, and oops, I can see that if it hits $70, it will instantly sell that position. But if it doesn't, it will continue to it won't close the position. Okay. So I can edit this to whatever it is that I want, but this is good if you say you're like, I don't want to risk more than 10% on this trade. You can, oh, it came down. So also you see that it filled me at 69, $69 instead of $70, even though I put 70. Sometimes this happens with stop orders. Sometimes a candle can gap down super fast and it can actually miss your stop order and you don't get filled. So you have to make sure that you're doing this with like super liquid stocks, or else stuff like that can happen. I don't recommend trading anything that isn't liquid in the first place and doesn't have a lot of volume, just for that reason, but that can happen. All the stop is saying is like, get me out, get me out. Like the trade went against me, get me out. And it works the same way for like if you were shorting something. So I'll go in here and I'll short something. Say I short this, right? I enter into a buy order and I change it to stop, and then I put my stop higher. Oops. Number 2. Okay. And now my stop is up here on a short position. Okay. So, and a market order, I just use that to get out of it instantly because I don't want to be in it anymore. But as you can tell, that those are the main strategies that you can use to get in and out of trades. The market order fills you at whatever price it currently is. The limit order is whatever price you want to get filled at. And then the stop is like, get me out, get me out. I no longer like to trade anymore. And you typically just put that below where you are like, okay, I don't feel comfortable losing this amount. So you put your stop there, or wherever you think the trade is invalidated. You put the stop there, and then you hope it hits your take profit, which is going to be a limit order. But you'll put that there just in case the trade goes against you. In the next video, I'll go over trailing stops and how they can be used to take the most amount of profit and be used for long time frames, especially if you're trading leaps options and you don't want a certain amount of drawdown, but you want to have a stop order, but make the most amount of money possible. So I'll go over it in the next video. Now that you've learned how to protect your losses, the next step is protecting your profits, and that's where a trailing stop comes in. A trailing stop order is very similar to a regular stop order. The only difference is that a trailing stop order moves up as price goes in your direction. So this helps you lock in your profits as price moves up or goes in your direction. And then it also gives your trade some room to breathe. So how does it work? Ideally, you'll set a trailing stop about 10 to 20% below where your current price is or whatever your risk tolerance is. Say I want to lose no more than 10% on a single trade. I will have my trailing stop loss at 10%, and that reduces my risk to 10%. If the stock goes up, so will my trailing stop, and it will continue to go up. And then if the stock goes down 10%, from where it previously was or its highest point, that's when it will automatically sell your position. Now I'll go into showing you exactly how you can take this trade on a chart. So as you can see, I am in a my Thinkorswim account. I'm on a 1 minute for SPY, and say I have shares, right? Let's just say, for instance, I will come down here and I will sell. I'll press edit. And what I'll do is I'll press trailing stop. And all I can do here is I can set a specific percentage that I want it to trail by. So say I want it to trail by 10%. I'll come down here and I'll put 10%, and it will automatically put a stop order 10% below where my position is. And if my position continues to go up and it grows over time, that trailing stop loss will automatically go up with it as well, with a 10% drawdown. You can also change this to a certain dollar amount. So say you don't want to lose more than, let's say $100 on a specific trade, then that trailing stop loss will always be $100 below the highest point of your trade. So I'm not going to actually confirm and send this, but that's how this works with a stock. If I was going to do this with an option, so I currently have Blackstone contracts. Say I have a position here. Okay, I'm going to right click. I'm going to create a closing order. I'll come here, and right now the contract is worth 1,195. Okay, if I wanted to sell this and I wanted to do a trailing stop, I will come here and I'll put percentage, and this just means that if the contract goes down 10%, so it goes down to about $1,000, it will sell my position at that point. If it goes up to, say my contract goes up to 2,000, well, now my trailing stop will also go up as well, and the max amount that I can lose is 10% of that $2,000, so $200. So this is really good for being able to take profits and mitigating your loss and your drawdown. You can edit this to 20%, 5%. You can do all sorts of different things. If you want it to be a dollar amount, say the max I want to lose on this is $500, I will put this, because remember with options, the decimal goes over 2. So this is really 500. So this is the max amount that I would want to lose, and I could confirm and send it. I'll do it right here. I don't actually want to take the trade, but that's how you would take a trailing stop order. So essentially, it's a regular stop. It just goes up while your position goes up as well. And this is just really good so that you're maximizing the amount of profit you're receiving, and then you're also mitigating your loss at the same time, especially if you can't be in front of a computer, you're traveling, you're working, you're doing whatever. This is just a good way for you to mitigate risk and actually be able to take profits if you're in the green. The next order type is OCO. OCO stands for one cancels other, and this is just used to put multiple orders at the same time. So you can take your take profit and your stop loss and a market order to enter a position all at the same time. And it just means that, say your take profit is hit, it automatically cancels your stop order, and then if your stop is hit, it automatically cancels your limit order. So I'll go ahead and show you an example of this on the charts, because you can do this with both options and shares. And I'm in my chart with SPY, and all you're going to do to be able to create this order, I'm going to sell, I have a share. I'm going to right click, I'm going to buy custom with OCO bracket. This shows me where I'm going to be purchasing this the share at. So I'm going to go ahead and change this to a market order. Then this is where my profit is going to be taken, and then this is where my stop loss is. So this is my limit order, and then this is my stop. I'll change this to good till canceled and good till canceled, because all that means is that the orders will be there for longer than a day. So even into after hours, those orders will still be there because it might not reach this in one day. So I'm going to confirm and send this. It automatically filled me at as a market order here. If price comes down to here, it will automatically sell my position and cancel this order because that's my stop loss. But if it comes up to here and it hits this limit, that's my take profit, it will automatically cancel this stop order. So I can move these directly in the chart. I can move this up, say to here, and send it. And I can also move this down to here and send it. So I want to see which one gets sent, so you can see that it automatically cancels the other one when you do this. So let me get close. Okay, there you go. I didn't even have to do anything. So it was able to sell it, and it closed my position at this. It closed my position, and it canceled both orders, or the one that didn't get filled. You can also go ahead and do the same thing with options as well. All you're going to do is you're going to come over here. You're going to right click on whatever option contract you want to buy. So I'll come out and I'll do a 30-day expiration, or just for the sake of this, I'll come even closer. I'll do 1-day expiration. Okay. This contract right here is worth $150. So I'll right click on it and I'll go over to buy custom with OCO bracket. This right here shows me what price I have my limit order at, and then it also shows where I have my limit to take profit, and then also my stop. Okay. So I'm going to go ahead and send this. It filled me at $152 for this contract, but if you go ahead and look at the chart, you can see that if it comes up to here, that means the option will be worth, where is it? Will be worth $252. So it'll go from $152 to $252. And then if it goes down to here, it also shows that being $52. So I would lose $100 if it came down to there. But this is just showing how you can mitigate your risk. This is important because you can set your trade and forget it. You have your take profit, and then you also have your stop loss. And it kind of helps you mitigate your emotions, because 80% of trading is actually about your emotions and human psychology. So you don't want to be doing too much. You just set your trade. If it hits, then it hits. If it doesn't, you take your losses and you move on to the next trade. Now that you know how to buy and sell using different order types, let's move on into the different types of indicators there are that let you know if price is at a good point for you to buy and to sell, and how you can use these all in congruence so that you can make the best trade possible.